Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about morepen Labs, whether it is a buy or a complete avoid and what is the reason to avoid such a stock. So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about Morepen Labs, the company was established in 1987 and it went public in 1993. It exports to US, Europe and Russia. It is a pharmaceutical company that provides API and as well as generic drugs, and they have manufacturing facilities across in India and in Netherlands as well. Deals in API formulations, as I said. Diagnostics and OTC business is also parts of Morepen Labs. Three US FDA approval of manufacturing facilities in Himachal Pradesh that they already have. So the facility that like Sun Pharma or Bindo etc. have Baddi in Baddi, Morepen also has facilities in Himachal Pradesh and they work from there. If you look at the financials of the company, then sales went down by around 5% and net profit was flat at 11 crores. The promoter holding is around 35%. There is good FII DII holding as well, although 24-25% holding is with the retail investors. Return on equity is 11.7% and net profit margin is around 4%, which is not that great considering many pharmaceutical companies do provide return ratios which is in the mid to higher teens. So what's hurting the Mopen Labs business? There was a SEBI ban on further trading by promoters in the business, although it has been lifted just recently. But this cloud will remain always on the stock that the trading ban came in because of some issues that SEBI had with the promoters. There's also a sectoral sentiment that is, although positive, has gone positive and had gone positive recently, but now there is absolutely some stocks in the pharmaceutical sectors which are doing well. So there has been selective buying that are taking place, and you're looking at a Aurobindo Pharma, an Ipca Labs, a Dr. Reddy's, a Divi's Lab doing really well, or you would say an AstraZeneca, Sanofi, Abbott, things like that. Even Abbott has come down from the highs. But MNC pharma companies and large cap, you can say better Indian grown pharma companies are doing better. The small and mid cap pharma companies, which is not known that much, are not doing that well. US FDA has cracked down on top pharma firms recently, although approvals are not now coming in. But even mid or small cap pharma companies are not getting approvals that quickly. Numbers have been deteriorating, and as we have witnessed, that numbers are either flat or negative with respect to year on year comparison. There's extreme competition from other countries as well, apart from companies here in India. There's competition from East Asia, and there are, you can say, a number of pharmaceutical companies which are unlisted pharmaceutical companies doing well in the same space. So this Morpen is not doing something that is totally out of the realms of the other companies, so you have to take that into consideration. Management, I suppose, is not that, I mean, the best management is not the best in this industry, and that is why the ban came in from SEBI, and the company being in ASM etc has also meant that larger investors have stayed away from the company. And that is why you see the stock at around 20-22 rupees, whereas we have seen surge in Morpen about 2-3 years back, but with other pharmaceutical companies in the recent rally doing well, yet Morpen has not done that well and only have recovered, you can say, doubled from the lows of March, whereas other companies have absolutely surged to new highs. You look at an Aurobindo etc., although I'm not comparing the business of both, but still many even smaller better companies have done better than Morpen Labs. Promoter holding is low. I think with 33-34% promoter holding, it should be closer to 50-55%. If you look at the technicals of the stock, then short-term support lies at around 21 rupees. There is a long-term strong support at around 17 rupees, which is the 200 DMA. Right now, the stock is between 22 and 23 rupees. Stock has done virtually nothing in 5 years. In 5 years, it is up like 5 or 6%. So it has done virtually nothing. Yes, intermittently it has gone up to 30, 35, gone down again, and so on and so forth. But overall, if somebody would have invested in the stock for a longer period of time, they have made no returns. Have been in a broad range of 21 to 25. So any declines below 21, closer to 18 or 19, will be very good buying opportunity. The risk reward ratio would be better at those levels compared to buying it closer to 24 or 25. The major breakout is basically expected above 32, 33 levels. Once it breaks out of it on a weekly basis at those levels, we might look at the stock going towards 47, 48 as well. But till then, we could be seeing the stock in a certain range. Numbers have remained subdued, and that has not helped. So technically speaking, if somebody is looking at the stock, the strength will only come when the stock go past 32 or probably even 35 levels. So at around 21, 22, it's better to wait for either a breakdown or a move above 25 rupees with a strong move with some momentum and news driven rally. That would be better to get into it. Otherwise, it is a complete avoid at the moment on all fronts. So, what to do? Well, avoid at all cost. I believe that there are many other pharmaceutical companies that would do well. They may erode all the wealth that you're having. So, you have, suppose you have made money by investing into consumer stocks, investing into a Reliance, DMart, etc., a Whirlpool, Colgate, Asian Paints for that matter, and you made a lot of money. You're looking for a small cap company that would do well. A morepen is not the one to get into, and probably you will be, if you don't lose a lot, you will lose a lot of sleep buying over this stock. Best to buy simple businesses, and even in the, you can say, the pharmaceutical space, we look at percentage returns. So it's not a matter of buying the smaller or the larger businesses. I think Aurobindo Pharma, even Sun Pharma looks better on charts. I don't know about the business, probably results will take care of themselves. But on charts, Sun Pharma looks better. On business front, Aurobindo, Dr. Reddy's, Divi, Zipka, even Sanofi for that matter, look better. So there are better pharma plays available. Abbott on in such levels, say 15,000, 14,000, look very good. 13,500 strong support on Abbott. But have a good long term view, and these stocks are pretty good compared to a morepen. So better pharma plays available, and look for cash generating businesses. Look outside pharmaceutical. You have many cash generating consumer oriented businesses into diagnostics, into hospitals, into medical care, and even into food, beverages, and FMCG, etc. Anything you name it, even consumer goods, and probably those are better businesses to look at. So this was my video on Mopen Labs. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.